Special guest Robert Turbeville, Chief Lending Officer at First Federal Bank, discusses their evolution of construction lending, highlighting the shift from manual processes to advanced technology, and addresses the impacts of tariffs and labor shortages. Robert also shares insights on innovative partnerships and predicts a future marked by significant automation and a streamlined customer service.
The next few years, it's going to be unbelievable. The loan to decision to closing on construction, which is the longest, will reduce by 50%. The customer's experience, they'll understand more, they'll have more information at their fingertips, and they'll be able to ask questions and get answers quicker.
I'd like to welcome everybody to the Construction Lending Podcast. I'm your host, Sean Ferris with Land Grill, and today we got a really great guest for you, Robert Turbeville, Chief Lending Officer at First Federal Bank. I've known Robert for a long time. Really excited to get you on the podcast today, Robert. Thanks for joining.
Sean, great to see you again. I'm looking forward to it as well.
Now, how long have we known each other, Robert?
Oh, I think we met after the Great Meltdown, maybe a decade ago or more.
Yeah,
So,
feels like forever.
absolutely.
One of the things that we've gotten to talk about offline that I didn't know was your origin story and how you even got into construction lending and First Federal Bank. And I think that's a good place to start here if you want to just tell our listeners a little bit about how you got into all of this.
Sure, absolutely. I started the week I turned 15 doing roofs in Florida over the summer. That certainly motivated me to go to college. I appreciate every roofer out there. It is a hard job. So that's how I got there and worked myself through college and wound up being fortunate enough to be selected for management training and commercial lending at GE Capital in 1990, I guess. So worked with that fine company for 4 or 5 years and then joined Barnett Bank, which those that are from Florida know that it was the largest bank in Florida and was hired in a unique role. I was the only one that was doing home loans and commercial lending. And so that was a nice combination. It was nice to work with business customers and then also provide their home lending needs or their key employees, sometimes their parents. So you much more relationship oriented than just a traditional banker's role.
How did that? I mean, that's not something you see a lot of even today, right? I mean, you do see it, but it's not a common practice.
No, it was the vision of the local bank president. His name was Joe Williams. And so he wanted to try it. I knew business banking, commercial lending. I did not know residential lending. So they paired me up with their subject matter expert, a gentleman by the name of Rob Burns. And he was very patient and taught me residential lending back when, we had to order out our own files and we would hand type applications. So it was a long time ago, but it's a good way to learn.
Would you chalk that up to a success? Like, hey, this is something everybody should learn, or is that like a good practice that should be implemented? And how do you think about that today? Looking back on your experience with that, is that something that everybody should learn how to do, or you'd recommend? How do you think about it?
I think there's certain loan officers that would gravitate to that, and there's others that want to be a subject matter expert. They want to do one type of loan and do it better than anybody else. And so I think that that's a mixture. We have a gentleman here that I'm getting ready to mentor in the same role because I think he's got the right aptitude for it.
So if anything, like the thing that stands out to me the most is it creates, almost like a pathway to management or to leadership that, hey, you're learning both sides of the business.
That's right. And you connect across the organization, which, if you're more niche oriented or siloed, that wouldn't occur. So you work with commercial team, the residential team, the deposit taking team. So you really learn all aspects of banking.
And how did that, when you look back at that in your career, you'd say it paid off?
I guess it gave me exposure to other managers and proved to them that I could be successful no matter where they put me. So I was a plug and play guy. So if there was an issue or a need, you could put me there and I could make it happen.
And I can just imagine understanding the impact, as you're working with different, departments, and you get into not necessarily management training, but just management meetings, right? And how different parts of the organizations, did it help your decision making, as you're managing one department or another department? Does it kind of influence those decisions overall?
I think it does, because if you look at the level of detail needed to be a good residential loan officer, very similar to someone building a roof. You've got to know exactly how to get that pitch right, the right product, seal it so it doesn't leak. And so you become very detail oriented. Commercial lenders typically are a little bit broader. So they're thinking more big picture, because how do I help this company? And each company's needs are different. And so I think it gives a good balance. And so when you're growing up the executive ladder, you need to be able to do both.
No, that makes a lot of sense. That makes a lot of sense. And I didn't mean to take us off on a tangent, but I just find that just that balance, really fascinating and something that would just interest me if I was in that role. So, thanks for sharing that way. But if you want to continue on your journey there.
Sure. And the one thing that we did, for those of your listeners that are younger, this won't make a lot of sense, but we used to have Rolodexes before we had all these fancy CRM systems. And so, Barnett being a B, I took myself, my processor, and my assistant and made us about a half an inch taller than any other Rolodex card and put our pictures up there. And then I'd go around in the 11 counties that I served, and I would put them in everybody's Rolodexes. So there'd be these people staring at you if you needed a loan or a banking service. And it worked out really well. We were very successful team.
That's awesome. I remember the Rolodexes. I think, I'm probably right there on the cutoff, like one of the last guys to ever get a Rolodex, but how you'd flip through them, but I can imagine one being as high as the letter that it represents and just seeing somebody's face. But I mean, that's a genius idea. That's the $1 million idea somebody came up with.
We had some good ideas back then. And then on all my business cards, I put on the back, have application will travel, because I had a briefcase back then, and that's how you did business, was face to face. And so I listed the common elements for a business loan or a residential loan on there. So for instance, tax returns or whatever it might be. So it got me a leg up, I guess you would say.
Oh, that's awesome. That's awesome. Like, just thinking about how much the industry and business has changed over the last, I mean, we've been fully remote last 5 years now, 4 years since 2020. And it's just interesting to see, kind of like journey from paper files to everything being digital, and CRMs over Rolodexes, and email over fax machines, and digital phone photos over Polaroid cameras. It's definitely changed a lot. What are some of the big things that stand out for you as changing over time?
I'd say definitely everything that you just mentioned, but certainly the use of the cell phone. I mean, you can have your mobile office anywhere for all practical purposes, and so I think that's been a big part. And then just the sheer number of people you can reach, whether it's social media, email, electronically, even if you want to make dial individuals, you can call so much easier than you used to be able to call. You're not punching in all these, random numbers. You've got everything right at your fingertips, and you could set auto dialers, whatever you need.
Yeah, it's definitely convenient. I was just on a family vacation, and we were talking a little bit offline about this, but just being able to be on my cell phone, or have my cell phone right there, and easily pull up an email, or look at a transcript, or sign an agreement. That's the thing that just really blows my mind sometimes, about how easy or convenient it is to do something from a mobile phone. And, you could view a document, you could send a document, you could do all these things. It's pretty dang powerful to just be connected. And I also think there's probably a downside to all that too. But
Yep.
I think it's a little bit different for everybody. And, kind of transitioning back, one of the things that we talked about kind of in your origin story, I wouldn't even say it's in your origin story, it's more where you are today, is just how many parts of the business that you're managing for First Federal Bank.
Yeah, I've been honored and cursed by the bank to be responsible for commercial lending, our SBA lending, our residential lending, our specialty banking, which supports the state legal cannabis business. We have a national equipment finance arm that provides equipment financing across the country. Warehouse lending, which also supports residential, but for independent mortgage companies, as well as our capital solutions, where we buy and sell pools of loans, all kinds of loans. So
I was running out of fingers there. I mean, that's a big responsibility.
but I'm blessed with an incredible team. That there is a president of each of those divisions that basically runs it and does the heavy lifting.
I mean, I could ask a million questions about, well, how do you do it? Do you enjoy doing it? But I think it kind of speaks for itself. I'll leave you with this one. Which one do you enjoy the most?
Oh, probably my roots being commercial lending. That's probably always going to be number one, because that's where I started. That's where I cut my teeth.
Why? Besides that, like what's interesting about commercial lending?
The different businesses, for instance, people getting a house, it's their dream home, but it's a home or a condo or what have you. Businesses are so diverse, their needs are so diverse, what they do is different. Whether it's a coffee shop or a manufacturer, it's just interesting. Someone that's willing to step out and start their own business or come up with an idea and invest in it, that takes guts, that takes courage, just like when you guys launched Land Gorilla. So, you don't do that faint of heart. And so I admire that. And, there's a reason those people write books, because they're interesting stories. Mine would be very boring. Theirs are interesting.
So you've been at First Federal Bank 20 plus years.
I have. Yes. First Federal was a friendly competitor of mine for most of my career, and we joined forces in 2005. The bank itself has been around since 1962.
Wow.
It was started in a strip center with a screen door, so it was Savings Loan Association. We are currently the last Florida-based mutual bank that has never issued stock, so it makes us really unique. We like that form of our charter. Certainly regulated by the OCC, just like all the big boys. Pay taxes. So, we're not a credit union. We like our bank and credit union brethren, but we're different, and we like that. And we have grown both organically across the northern half of Florida up into South Carolina, de novo branches, which means starting up a branch, till we purchased 5 banks and 3 mortgage companies. So we're do a little bit of everything.
That sounds exciting. Now, where does construction lending fit in all this? Where is it always been part of the bank's DNA?
Yeah.
Is it new? What?
No, it has. If you start as a savings and loan association, you had back then high rate savings account and home loans. That's all you were able to do until it got changed. So First Federal's been doing construction loans almost since day one.
And where do you fit with construction lending? How has that been a part of
Sure.
your career?
My very first home loan in 1994 at Barnett Bank was a convertible arm construction loan.
Convertible arm construction loan.
And so that was, I got my feet wet, arguably with one of the more complicated products, and did a lot of construction lending.
And what type of construction lending is the bank doing today?
We do all types of residential construction lending across 5 states, I believe, at the moment. We also support independent mortgage companies through construction lines of credit on our warehouse line. So they are actually the lender of record, and we are the funding source. We do construction lending, everything from hotels to remodeling to put a restaurant in. We also do SBA lending, which is a lot of startups, like coffee shops would be an example, new medical office, veterinarian facility, doggy daycares. So all kinds of stuff like that.
Doggy daycare.
Yeah. Who would have thought?
One of the fastest growing businesses in America.
That's right.
No, that's awesome. That's awesome. So what are you seeing out there? Any trends or challenges impacting the construction lending industry?
I'd say definitely, you're seeing the impact of the tariffs and the cost. You're hearing about it a lot. We're having to really read contracts closely to make sure that the builder and the borrower knows what that person can afford, so that they don't, get themselves in a jam. You're hearing a lot about the workforce, both the skilled laborers as well as the unskilled. So I think that's definitely going to impact construction short term, but maybe long term.
Mhm. How do I think, with those two areas, if we focus on labor and tariffs, we think about tariffs, like how has it changed the conversations that are happening either between you and borrowers or borrowers and contractors alike? What does that conversation today sound like, with
Yeah.
the potential of rising costs?
They're trying to have escalator clauses, which
Mhm.
basically means they can, if the material costs go up after they've signed the contract, they have a way to cover that. And if I was a contractor, that's exactly what I would do. If you're a borrower, you need a fixed cost. You need to know how much you're going to pay for your house.
Mhm.
And so there's a lot of dialogue around those two areas right now. The outcome's different in every situation. Banks have to loan on fixed cost. We have to know how much the project's going to be. We have to have someone like you come in and monitor it for us
Mhm.
and look at it. And we have to have an appraiser determine if that cost is worth it based on comparable sales around the area. So it's a difficult conversation today.
Yeah, it's better to have the conversation up front than it is to not, right?
That's right.
And the more honest those conversations are between borrowers and contractors, and um, I think it helps prevent a lot of bad outcomes, when you're able to have those types of conversations. And I want to say it was the NAHB that created an addendum to the construction contract, and
Mhm.
not out of necessarily out of the tariffs, but it was more out of the rising costs and inflation, when we were seeing supply chain issues and all sorts of stuff impacting from the pandemic. And we were always looking for that addendum in there, because at the end of the day, you want to keep honest people honest. And
Yep.
the way it's written is kind of, I wouldn't say tricky, but it really opens the door over, and it works in the benefit of the general contractor versus the borrower. And there's ways to mitigate that. Are you guys using any contingencies or interest reserves into your contracts today?
Commercial, absolutely. We try to factor in a contingency on every commercial contract. On residential, it's a little tougher
Hmm.
because, what qualifies? That's really the gist of it, because you want standardization as much as you can. The other thing we added was we have PowerPoints that are for residential that we send to each applicant and a different one to their builder, both at application and at approval. And so it's really to remind them of all the steps and the things from both sides to watch out for so that they work well together. because in reality, the contract's between the borrower and the builder. It's not the
Mhm.
bank. All we're doing is making sure the house gets built for the money that's been allocated under, the terms that we agreed to with the borrower.
Mhm.
So, a lot of people don't really understand that. They think that somehow the banks, they're intermediary, and we're not. If there's a dispute on something construction related, we go to Land Gorilla and we say, hey, please step in here and, help the dialogue, continue, and let's try to solve the problem. The bank doesn't have the expertise to do that. You guys do. And the same applies in commercial and SBA. We have PowerPoints for that too.
And there's always ones that seem to slip by, right? No matter how upfront you are, no matter how great the meeting is, it there's always, things go wrong, and I think that open level of communication definitely helps. What are you seeing on the labor side? Skilled, unskilled? Is it just is it more just driving up the initial cost, or is it project delays? What are you hearing there?
Yeah, I would say it's driving up the cost. I expect it to have project delays. I haven't witnessed that yet. The biggest project delays we have is permitting. The permitting offices in some cases are maybe short-staffed in different parts of the country. And so that's been the biggest delay from that side.
I haven't seen, one area impacted more than another. I'm not quite seeing the impacts either way, especially when we compare it to like what it was during the pandemic, right? It was a lot more reactive, I would say, jumping on calls, trying to think through this. Hey, this construction lender over here is having these issues, and they're looking for a little bit of guidance. A lot more conversations. Whereas right now, it seems to be probably a lot more questions of that sound like, "Hey, are you guys hearing this? Are you hearing that? Or how concerned should we be?" But I think, especially as it comes to the tariffs, there's that kind of inventory factor, and I want to say 90 days, 120 days burning through inventory until you start seeing the impact. Now should be the time where we start seeing some of these things, come to the service. Oh, my X, Y, and Z went up, or the borrower's having trouble getting the home completed, or contractor wants to walk. Haven't had or heard of those conversations yet, but I think kind of the general consensus is, just keep your ears open, and we're expecting it to happen, just haven't seen it happen yet. But probably right about now is when we should be starting to hear about it or see it. One of
I
the two.
agree completely.
Yeah. Um, what other kind of hot topics are you seeing out there related to anything on the construction lending side or regulation side?
I'd say there's a little less construction lending in general going on, and construction coming out of the ground. Not an alarming amount, but I think that's probably interest rate driven, and just the uncertainty, I
Mhm.
would say, surrounds that. You know, I would suggest to you that there's as many Americans that want to build their dream home today as there was 10 years ago. They're just being a little bit more cautious, would be my guess. I think your small business lenders are certainly more cautious than they were 2 years ago. And I think that's probably prudent. Agree with their reasons to think that way, but they're still doing projects. They're just spending a lot more time finding the most economical way to do it.
Yeah.
So
How much are interest rates impacting everything right now?
I would give it 10 to 15% of the impact. Um, I don't think it's as big an impact as the news media may tell us it is,
Mhm.
because we're really at historical averages.
Yeah.
Not like we're at highs. We're just not at the lows that the pandemic drove us to. We're just at average. And
It's
normally average works for the United States.
stable and steady.
That's right.
Yeah. Not good, not horrifically bad, just stable and steady.
That's right.
In your mind, interest rates go down 0.5% tomorrow. What changes?
I'd say not much. I'd say rates need to be under 6% consistently. And then you'll probably see a little bit of, demand pick up.
Mhm.
There'll be some people that probably would refinance, maybe take equity out to do home improvement projects. You might see some houses turn. If you're at 4% and your rate's now 5.5%, that 1.5% probably doesn't stop you from doing anything. 2.5% might. So, so that kind of change.
Anything legislation wise? What did we have? The big beautiful bill. We had the Genius Act just passed this weekend. I think there's a lot still to unpack in that one.
Yeah, that one, there's a lot, stablecoin would take days and weeks of research before I could, and still not talk intelligently on that subject. But I think it's a good base and start for the United States, and we'll see where it goes. At least knowing what your income tax rates are going to be for a period of time creates stability.
Mhm.
It lets you plan, and business owners and contractors have to plan for the next year or two or three or four, and stability is a good thing.
Predictability is better.
Yeah.
Love them both. Love them both. You get them both, and home run. Now, First Federal Bank, I'm going to pivot a little bit, has a really unique partnership. QRL Financial Services, right? QRL Financial
Absolutely. Right.
Services. And we talked a little bit offline about this one, but I just remember going, wow, isn't that interesting? Why don't you tell us a little bit about QRL Financial Services?
Sure. They joined us in 2011, and so we support primarily credit unions, but certainly some banks as their backbone for residential. So you might walk into your credit union and want a home loan, and they may not have that expertise. So they'll certainly take your application, but then they work with us depending on their needs, from processing, underwriting, closing, servicing your loan, their own portfolio loans. Some of them, we help them with those as well. And so some of them use our software instead of having to buy their own. And we look at that as it's just a partnership. Some banks view credit unions as I don't know, as an antagonistic relationship. We figure there's room for everybody. If you're good at what you do, then that client will choose you. And if they're good at what they do, they'll choose them. And we support that industry. And all of us are here to provide services for the consumers of the United States.
I mean, that's pretty amazing, and maybe it hits me a little bit more because I'm in the vendor shoes, right? So it was really refreshing to hear, and it was probably the first time I think I've ever heard of it. Like, that relationship between a bank and a credit union is really positive. So I found that really fascinating, and just thought it was a really cool, interesting thing about First Federal Bank.
Well, thank you.
And you guys also do it for SBA lending as well?
We do. We do that with SBA lending, exactly the same concept. So it's called SBA Works. We have credit union and bank customers that we're the same thing. They have a customer, they approve the loan. We provide all the SBA paperwork side and get it through to closing, help them along the way if there's questions or challenges. Because that's very complex as well. And so we have a staff that does that.
Wow, just really kind of helping them over the almost technology hurdle or resource hurdle there, kind of which brings us to our, one of our last segments here is kind of the technology's impact on construction lending. We talked about this, offline a little bit and even at the beginning of the podcast today. But what would you say, some of the challenges were, before, there was technology out there, and I'm kind of using technology broadly, but let's say before the 06, 07 financial crash.
If you were a bank like us, you had to hire qualified staff that knew how to review contracts, that knew how to, check references. Back then, appraisers were doing the inspections and they were busy. And so they'd snap photos and do their best. And that industry has a lot of pressure. So I admire appraisers. And then if something was wrong, you know, you were trying to negotiate something that you weren't an expert on. Your staff really wasn't an expert. And so then the, blow up happened. And for a lot of us, people started retiring. It was just that they aged out, and you didn't have a lot of young people that wanted to do that role. They didn't want to do construction admin sitting at a bank somewhere. They wanted to do something else. And so we met you guys when that occurred. And not only did we start partnering with independent mortgage companies through warehouse with you guys, we also invested in your software, and you started becoming our construction administration. And now you do it wholesale throughout our organization in a lot of ways. And so, it's a great partnership, because I don't have to try to find somebody and hire them that has that skill set. You're going to keep me apprised of the latest and greatest, for instance, drone technology and taking pictures of roofs, et cetera, that, I don't think First Federal wants to go hire a drone operator and have them drive around with a drone in their trunk. So, it gives us peace of mind that we can grow and do more construction lending because we have got a good partner.
I love it. I love it. I love, we've had such a great historic relationship, and I know exactly what you're talking about. That subject matter expertise is really special. You guys have been a great partner. And anybody that's out looking for a warehouse line, First Federal Bank, there's the shameless plug in there. I mean, are you guys seeing an uptick on the warehouse business? People looking for construction supplements. I think that's a pretty telling indicator.
We have. That's been, I'd say, a surprise of the last 12 months or so. We've increased our customer base on the warehouse side. Certainly, the majority of them have a construction sublimit. A few don't, but so we found that is something we think we do well. Partnering with you guys makes it easy. We use a tri-party agreement, so we see what's going on from the inspection standpoint. And so when a funding request comes in, it's pretty smooth. And our staff, you guys have done a great job of making sure our staff has access and understands what they're looking at. So, that takes a burden, the education burden off of us. So we appreciate it.
What any problems in construction lending that you've seen technology play a big role or big impact on? You've seen it beginning to end, long career. What are some of
Sure.
the best ones?
I would say, technology has made things like comparing cost a lot easier. It was somebody manually comparing it, back 20 years ago. And that's asking just a human being to be accurate 99.9% of the time. And that's, impossible. And so certainly that helps. We all used to have the old Marshall and Swift handbooks, and we compare it. That's what you do. You thumb the pages through. And, that wasn't regionalized really back then. And you really didn't know what the local market labor costs were. And so that's certainly changed. The plan comparison. Can you really build the house for the materials that are listed? Again, that was manual too, with someone that had been looking at it for a decade or longer, typically at a bank. And so now we don't have to do that. Technology does that for us. So it takes that away. But certainly the inspections. I used to do inspections. I used to have a little tick sheet on a piece of paper, and I'd tick off what I thought was there. Certainly not very efficient or accurate. So it's a lot more accurate with the pictures, and they can scan, you can see it's there. They're all installed. I mean, most of the time wearing a suit back then, I wasn't going to traipse through a hot, dusty site. I was kind of walking around from the outside, getting back in my air-conditioned truck as quick as I could. So all of that has improved the process for the borrowers and made it a lot faster to fund for the contractors. So I think it's a true win-win.
Yeah, I think that's That's probably a big one, is the reduction in draw processing time, for a long window. That's, where we put a lot of focus in, is how do we take 8 days and get it down to 2 or 3, or something that's really reasonable, because the impact revenue wise can be significant on an entire port. When you start shaving those days off, you're dispersing more and getting more net interest income. Such a big focus. And then, incorporating the customer experience into that. Hey, you want to have repeat business, you want to keep, the loan agents happy, and you want to keep the bank happy. You got to have a good customer experience. If they're not having a good experience and your software is making it a pain in the butt, or they can't do what they're trying to do, or things aren't working, or they're breaking, that's just as important in there. What else are you seeing, where technology has played a pretty important role?
I'd say the decision making side of lending.
Hmm.
The automated underwriting systems that basically kind of run the initial and show you these are the things you need to verify, are getting quicker and quicker and quicker. We partner with Encino and with ICE, and their optical reading capabilities, they're embedded, and it's really not Chat GPT, but it's embedded prompting and writing for you, or pointing out where a particular issue might be within your loan application that you might not have caught yet, so you can find it faster and get to the decision quicker. And that's what the borrowers want. A borrower wants a quick decision, no matter what type of loan it is, commercial or residential. And so that's really speeding up. Every 6 months you're seeing a big step forward. I think the next few years it's going to be unbelievable.
What do you expect? Yeah, that's a good segue. What do you see 5 years from now? What does construction lending look like 5 years from now?
Well, I don't think we're going to have 3D printed houses that robotic arms put together. So I don't believe that's going to happen. But I do think that you'll have material automation. I think you'll be able to do that more than we can even imagine today. I think the loan to decision to closing on construction, which is the longest today, that's the longest of all types, because there's so many places to move around between permitting and validation, et cetera. I think that'll shrink by half. I think it'll reduce by 50%. And I think the customer's experience they'll understand more, they'll have more information at their fingertips, and they'll be able to ask questions and get answers quicker, because I think AI will start doing that for them. So that's probably my crystal ball.
Yeah, I think you're spot on. Faster decision making on the front end, especially with AI, being able to look at plans and specs and comparison and cost analysis, and automation with builder acceptance process. And I think probably on the back end is, just a continuation of the customer experience, just continuously getting better, less errors and less things missed.
Mm.
Right? Builders risk coverage for insurance will always, like, you'll start hitting that mark perfectly every single time, rather than having to think about it and potentially making a mistake in the amount or coverage amount or the carrier, or adding additional insure, those kind of little tiny details. Better experience around more real-time title reporting. Is there a lien being applied, without having to order a title update, automation around, what that looks like, being able to see any recorded documents. Oh, I got the notice of commencement, and somebody doesn't have to go get a copy again or go out and get it recorded. Faster recording times. All those things are really fun and exciting to see on the forefront. Yeah, no, I get excited about that stuff. That's my world. But no, Robert, this has been awesome having you. Now, if anybody wants to get in touch with you, talk to you about a warehouse line, pick your brain on your journey or construction lending, what's the best way for them to get a hold of you?
They can call the office here, 386-754-7146, or my email is Turbeville, Turbeviller, @ffbf.com.
All right, that's fantastic. Well, thank you very much, and hope you have you on the podcast again soon.
Thank you. I appreciate it.
Thanks, Robert.
Bye-bye.
This podcast is intended for educational and informational purposes only and does not replace independent professional judgment. Land Gorilla Inc. makes no representations, warranties, or promises for and disclaims any express or implied warranties related to content. Before acting on any information, you should consider the appropriateness of the information as it pertains to your unique business needs.